Hey, how's it going, everybody? Welcome back to your favorite crypto trading channel, where in today's video I'm going to tell you a little bit about the new policy in the United States of America caused by the Federal Reserve, or the Central Bank of the US, led by Federal Chair Jerome Powell. Now, you guys have probably heard of J. Powell a lot of times in the past. This guy dictates basically everything going on in the world when it comes to monetary economics and some macroeconomic stuff, right? So there's a few terms that you need to know before I get started, which is, first of all, interest rates, second of all, quantitative easing, and third of all, inflation. So you guys probably know the first one and the last one, but quantitative easing is basically a fancy word for the process of, oh, look at this, I talked about J. Powell before. Quantitative easing is a fancy word basically for the process of printing of money in the economy, which is basically what caused the largest bull run to date since the times of the pandemic, right? So in the Bitcoin chart, in the Ethereum chart, in every single cryptocurrency, and also in the US 500 and largest indexes in the world, stock market, forex market, everything sort of just went up because of this quantitative easing. Now, let's take a look real quick at what Powell says. He says that he sees pain ahead as the Fed sticks to the fast lane to beat inflation. Now, there's a few things about inflation that are very, very difficult. So if inflation goes on for too much or for too long, and if it's too high, it is very, very bad because it can cause an inflationary spiral, end up being hyperinflation and rendering the dollar completely useless. So that is what hyperinflation would do, and it would be the demise of the dollar, which is why there has to be a painful period of slow economic growth to stop this inflation. Everything in economics is sort of a scale, right? You have on one side inflation and you have on the other side employment, right? For example, so if inflation is increasing, they have to start increasing rates, which will in turn increase employment as well, and vice versa. A lot of these things are just simply a scale, and you can't have both at the same time, which is why right now the main priority is lowering inflation, which is why there could be a period of painful, slow economic growth and possibly rising joblessness in the United States of America. Now, the EU, or Europe as well, is not on good terms. In general, the euro is very, very weak. The eurozone is having significant energy crises because of this situation with Russia. And basically, the whole world is sort of in a very shaky period since the last sort of largest crisis that we had, which was back in 2008, or the housing market crisis. Now, we did have a crisis very recently caused by the pandemic, which we're still feeling the effects of right now because of a slowdown in production all around the world. So it does make sense that we are seeing some economic troubles happening right now. Now, Powell said that they will raise rates as high as needed to restrict growth and would keep them there for some time to bring down inflation that is running at more than 3 times the Fed's 2% per year goal. It's around 6% inflation. It's absolutely crazy. It's way too much. And as you can see right here, reducing inflation is likely to require a sustained period of below trend growth, economically speaking, which makes perfect sense. And while higher interest rates do bring inflation down, it will also bring pain to households and businesses. However, a failure to restore price stability would mean far greater pain. So this is what Powell said, and it's something that you should keep in mind because it does give us an insight into the market, and the market is generally bearish at this point. So what we can see from Bitcoin right now is a breakdown from this nice correction pattern. And in the coming days, we could expect a slight retracement up here and then potentially a larger move towards the downside, because we are expecting some big news on Friday when it comes to non-farm employment, which will induce a lot of volatility into the market, as I said in the last video, and in general it will most probably crash the market. Now, I'm not a financial advisor, and you should do your own due diligence before investing into anything in the cryptocurrency world, but this is just generally speaking, whatever the Fed does, the market has a large impact from it. So if they say that increased rates are going to keep happening, so if rates are increased or rate hikes are still happening, the market is more likely to go down. But if they stop hiking rates, right, if rates start to go downwards, then the market will go up. And that's pretty much what it means. Hiking rates is a deflationary monetary policy, which means that it is there to slow down economic growth and slow down inflation. Decreasing rates, on the other hand, or cutting rates as they like to call it, is an expansionary monetary policy which allows for a lot more money to be flowing and basically just allows for the market to move up. So when it comes to Bitcoin right now on the daily time frame, we're basically consolidating. We're waiting for somewhat of a move. If we do move on to the 4-hour time frame, we're seeing pretty much the same thing. But if we move on to the hourly time frame, we can see that we did form somewhat of a bottom around this area right here. So we could make a further retracement up either into the 21k level or potentially even a bit higher. If we do take a look at the 4-hour time frame, I could expect a nice retracement up into the 22k level, somewhere around this area, before price starts to continue moving down. Now, when it comes to other cryptocurrencies out there, Ethereum, for example, is making a push towards the upside. It's making somewhat of a correction pattern, which does look bullish on the 4-hour time frame, but on the daily time frame, we're still not really quite there, right? Even though this does potentially resemble a head and shoulders pattern, an inverse one, so you see the shoulder, you see the head, you see another shoulder right here, I'm still not convinced that this is a bullish pattern because we do see another head and shoulders pattern happening as well at the same time, just completely reversed in light of the news coming in a few days. So be very careful trading these days, be very cautious. Volatility will be huge. Don't make any rash decisions, wait for the news to come out. Don't be one of those guys who tries to predict the market and puts all your money to shorting right now. I could be wrong, the market could be wrong, Powell could be wrong, the market could have already priced in all of this information and could as well keep going up. But you know, the most likely scenario is that when rate hikes are moving towards the upside and when they're happening, the market tends to go down, which is proven by the S&P 500, which let me just find it right here, which is also on its way towards more downside. Now, obviously, we could see a head and shoulders pattern forming here as well, but it has not formed yet. And the one thing that we like to do at this channel, crypto trading, is we don't want to try to predict the market. We're only reacting to what the market is actually giving us. So that's it for today's video. Drop a like if you enjoyed it, subscribe to the channel, hit the bell icon so you don't miss the latest crypto news out there, and I will see you all in the next video.